All right, Note Campers, we are excited for this next session. Many of you guys that have filled out the survey so far, thank you so much for filling out. There's a lot of you that are literally brand new into real estate, which is great. We all got to start somewhere. We all got to get rocking and rolling. But one of the most important things, and I'm sure everybody that's been around for a while will look back and recommend a couple things. One, always start with the end in mind. And when you're setting up your businesses, make sure you do it the right way. Make sure you're putting yourself in the right path, the right entities. You want to make sure you're treating it as a business, because there's a lot of things that can happen in real estate. It's not a matter of if you're going to get sued, but when you're going to get sued at some point. So you want to make sure that you're doing the right things with your entities, the companies, the deals that you're doing with, to not only protect yourself, but protect your partners and protect yourself from false suits and other things like that too for you. So we are honored to have our buddy Brent Buscay from Laughlin Associates. I think, Brent, you're like the longest tenured person over at Laughlin, or is it you and Megan, or how's it work? I think you're a little bit longer.
I hit 31 years in February.
31 years.
And I'll be 36. I'll be 36 in September. So.
You got started early setting up entities at 5 years old, everybody. But think about how many companies, how many entities do you think you, or plans or people you've talked with, or I mean, what is that? You know, that's a high six figures entities pretty much for the most part.
The last time I looked, I personally had my name attached to over 70,000 entities.
Wow. Wow. So we have definitely, and this is, you know, many guys are familiar with Laughlin Associates. You know that we have Aaron Young on our podcast. Laughlin is a sponsor of the Note Close Show podcast. They're a big sponsor of Note Camp here, so we got to give them a big shout out to that as well. But I always learn something new, and this is one of the most valuable hours. I would tell you guys out there that are doing things, you will learn something this hour and a half, and definitely, hopefully, something you guys take action on and protecting your entity, protecting your business, protecting your lives. And Brent is the guy who literally is the one that's sitting down, like you said, over 70,000 entities, companies, and I can't imagine how many profiles you sat down and gone through. It's got to be a whole lot more than that as well, too, for you, Brent. So we are honored to have your 31 years of experience helping entities really, and entrepreneurs and business owners really do the right thing. So I know you've got a PowerPoint slide. You want to bring that up, Brent, and share your screen, and then we'll dive into that.
Awesome. Huh? Let's go from the beginning here. And let's see if my PowerPoint, there we go. Are you seeing that okay?
No, you need to hit on the control panel, hit the share the screen button on your control panel there.
And we got a problem here, but we will fix that. We'll fix that really quick. My screens are switching on me because of the Zoom, but not a big deal.
Get dragged over.
And
there you go. You just got to maximize it now to your full screen length. Yeah. There we go. Look at that. Perfect.
No way. Yeah. For some reason, Zoom and PowerPoint on my computer, they decide to switch when they shouldn't, but they do. But here we go. I want to let anybody know that if you have any questions as we are going through, if it's relevant to kind of the segment or what we're talking about at the time, feel free to raise your hand. I will answer questions during the presentation. If you have questions that can wait, write them down, and I will stay on when the presentation's over, and we can answer those questions at the end. Just want to remind you, I'm Brent Buscay from Laughlin Associates. We are going to talk about lawsuit protection and selection. And when I say selection, I'm referring to what is the proper entity for what your business needs are. The presentation that we will go through today is geared towards the real estate world or notes. And it's going to be geared towards LLCs, even though I'll intermingle and we'll talk about corporations. We're keeping it towards the real estate side and the note side, but we'll touch on both entities and how they can function separately from each other. I got to give my little legal notice and disclaimer. Basically, I am saying I'm not an attorney or a CPA. If you seek advice beyond what what we're going to present here. If you have questions of your own, you are feel free to consult an attorney or a CPA. And in most cases, if you do not have a CPA or an attorney and we are discussing something that we need additional help on, or you want to seek a second opinion, we do have a pretty large network. Some of them are very friendly at opening themselves up to answer your questions at no charge to our relationship. A little bit about Laughlin. I think if we have any Laughlin clients on here, a lot of times people think we just form LLCs or corporations. Sometimes I hear people say, well, I thought you just form corporations in Nevada because you guys are in Nevada. We form LLCs, corporations, nonprofits, limited partnerships in all 50 states. We also assist in estate planning, corporate compliance services, which I'll talk about in this presentation. Towards the end of the presentation, it's kind of the piece that ties your entity together and makes it a functioning entity to accomplish the things that we want entities for. We do trademarks, and we have a lot of educational material. We do seminars, very comprehensive 3-day seminars. We do 1-day seminars. We have focus groups. We have groups designed to, help you remove yourself from your business and unshackle yourself. So we have a lot of different products. At laughlinusa.com, we do have a detailed list of all of the services that we provide. But for today, we're going to talk about entity selection, what an entity does. We'll get a little creative, maybe on some structuring, and then we'll talk about the compliance portion. But we're available Monday through Friday, 8 to 5, to answer questions, so you can always call in if you have any other questions about the other services. A lot of times, especially when I am personally dealing, or the staff here is dealing with a new investor, whether it's real estate, whether it's notes, or maybe even a new business owner, we're going into this blind. We don't know what we're doing. A lot of times we're trying to figure out, how do we get into the real estate world? How do we get into the note world? How do we get, what is the proper entity to do these things? Why would I need an entity? So that's what we're here to help with, is to take the blinders off you, educate you, teach you, and actually do it for you, so you can concentrate on your investments, on your rental properties, or in your day-to-day operating business. So it's very important to have the right team behind you. Not everybody can afford to have a CFO, creative writers, things like that, and you're only as good as your team. So we kind of thrive on being part of your team. Scott mentioned this, real estate is a magnet for lawsuits, and we could take away the word real estate. Doing business is a magnet for lawsuits. Anytime we engage with the public, anytime for services, anytime we enter into contracts with partners, anytime we're doing anything business related, financial related, or interacting with others, it's a magnet for lawsuits. We're kind of in I guess a sad time in America right now, but we're also in a great time for business. We have a lot of negative things going on in the world right now, in the United States, but it's a great time. And what we're starting to see is a lot of people coming out, and they're ready to, untie themselves from their day jobs. And whether it's starting a new business, as new businesses close due to, what's been going on in the economy, there's always going to be somebody behind them who's ready to start and take their place. I think you're going to see a lot of notes available coming up very soon, maybe at a higher number than we've seen in a while. So now is the time, I think, to prep. I think once we get rid of some of these negative things that are going on, we're going to have a very positive outlook. I think the economy is going to be good, and I think there's just going to be a lot of investments out there. And we're kind of a trend-related business. So as things start to pick up or a new trend starts, we start to see heavy activity, and we are seeing heavy activity in the rental markets, in commercial real estate, in startup business, and in the note side. So we're starting to see all of these things pick up at a higher level than we've seen in a while. And we've gone through some great times, and it looks, very positive for the upcoming months and the upcoming years. One of the things that we always say is, how do people see us? And I think everybody can kind of relate to this. As I've progressed in my age, in my income levels, we add new stuff. I mean, when I was 19 years old, I had a little crappy apartment. It might have been 600 square feet. It had white brick walls, and I had milk crates, tied together to make furniture. And I drove a 67 Buick that was beat up. And we start to add new things. We get bigger houses, more fancy cars. And as a business owner, we have a target on our backs to begin with, because everybody thinks that all business owners, all investors are rich. So it's more, once we start to have that profile put onto our back that, we are rich, we become a bigger target. So people look at that. They watch you driving that nicer car, or you've upgraded your house to a bigger house, and your target just continues to grow. Now, not everybody, upgrades. Some people stay modest and keep a very modest lifestyle, but they're known out there to be an investor. They're known out there to own a business, and you still have that target on your back. So we want to reduce the incentive to be sued. And not only do we want to reduce the incentive to be sued, if we are sued, we want to be able to protect what is ours. And there's many ways to do that. We will touch on, the main portions. We'll get into it a little bit, but remember, there's very simple steps to reduce that incentive. There's more advanced steps to reduce that incentive. So there's not one solution that fits everybody. But when we form an LLC, or we form a corporation, there's really one main reason that we do it. The next slide, I think, will go into multiple reasons, but asset protection is the main reason to form a corporation or LLC. Now, I'll have people argue with me, no, it's tax savings. That is somebody who has never been sued is going to claim tax savings is the main reason. If you've been sued, asset protection becomes the main reason. And it really was the main reason that corporations and LLCs were created. Tax savings, estate planning, and things like that came later on. But in 1819, the U.S. Supreme Court formally recognized corporations in the U.S. and added some of the early protection methods of the corporations in the U.S. Tax savings was not addressed in the first U.S. Supreme Court on corporations. It was really about asset protection. The corporation overseas was developed in the days in the 1500s to protect the shipping merchants from the high risk of taking wooden ships across unknown seas. So it's always been designed for asset protection. And as we move and progress, tax savings have become a great advantage that is afforded in LLCs and in corporations. They are designed to protect you against creditors. In some cases, we are using them for estate planning. And one of the things, and it might not really make sense at this point, but we'll touch on it, prestige and credibility. If I'm looking for an investor and I'm able to advertise myself as ABC LLC instead of just Brent, it lends some credibility. It lends some prestige. When you have a website and you're advertising yourself as an incorporation or an LLC, you're separating yourself from the sole proprietor, you know, Joe's Plumbing. And we've seen a lot of times where in a simple case is Joe's Plumbing, Joe was doing pretty well as a sole proprietor. But once he was able to advertise himself as a corporation, he noticed an uptick in his business. People were just migrating as he was a little bit more credible, that he had that prestige, he had that Inc. or the LLC behind his name. And we have the partner protection. And that's where LLCs really shine, is in the partner protection and in the flexibility of them. So again, we're going to go heavy on LLCs. We will touch on corporations. There are times that I'm assuming some of you guys would benefit from a corporation or an S corporation, and an LLC might not be the best fit. But in general, if we are holding rentals, the LLC is the preferred tool for holding rentals. If we're doing notes, the LLC is the preferred entity for that type of business. There are exceptions, but in general, you know, we are pretty confident that the LLC, for what we're discussing today, and I think what you guys are hearing over the next day or two, LLC would probably be the preferred entity to do that. Limited liabilities company, we have the liability only risk your investment. And that's being conservative. When we say you're only risking your investment, there are ways to protect the investment where the investment is not necessarily at risk. Limited liability companies are controlled by the members. What's nice about the LLCs, all 50 states, you can have a single member LLC, so you can be the sole member. You can have multiple members, and you can have members outside of the US, which distinguishes and separates it from, let's say, an S Corp. So when we say controlled by members, it's also the LLCs has more flexibility. In a corporation, if we are 50-50, that means that we're distributing the profits 50-50. In an LLC, you can design it where that's not necessarily the case. Maybe I have no money, but I have the database, I have the knowledge, and I have the ability to really launch this product, or maybe it's a consulting or a coaching program, but I do not have any money. So I can bring another member in and make him a member, but the payout does not have to be proportionate to his ownership. I can be a 50-50 partner with somebody, but take 90% of the proceeds and they get 10%. I can give them 100% of the losses on any given year if there was losses, and then in that year I make no money, but the next year I can take 90% of the profits. So we have a lot of flexibility in the LLC that we do not have in a corporation. Another thing nice about the LLCs is you have the flexibility of how you are taxed. when we form an LLC or you have formed your LLC yourself, it is considered a disregarded entity. So basically the IRS is saying we don't recognize it. Any income that comes into the LLC goes on your personal tax return, and you are claiming that as an individual. That's a simple way of explaining the disregarded entity. But I can also elect to have it taxed as an S corp, which can open up some tax savings for me. So maybe I know I'm going to be at a higher bracket, that I have more income coming in. So I might want to elect to be taxed as an S corp, where I could take a reasonable salary and the remaining revenues can be sent to me as a distribution, which would not be subject to the self-employment tax, which would give me a 15% savings on that distribution versus my salary. So, you know, there's rules and regulations behind that, but that's a simple example of tax savings and being creative with the flexibility of the LLC. Upon exit, you must get approval from all members before selling the interest. In most cases, when we're talking about the new investor, that permission is you, it's yourself. If you have a partner, then both members must agree upon it. That there are ways to avoid conflict when you have other members. A lot of people like to set up buy-sell agreements where everything is predetermined, why we're friendly, why everything is great. So if things do go sour or they go sideways, we have an agreement that we must abide by that was put in place why we were friendly and happy. So that is why limited liability companies are good for, you know, the real estate world, the note world, and even in the operating world of doing an operating business that's dealing with the public. So just extreme flexibility. Another thing that's really nice about the limited liability company is it's easy to move assets and potentially not have a taxable event. And I'll give you an example. If I was to purchase a note and I decided at some point that it was necessary to foreclose, and now I'm a landlord, I might want to move that property out of this LLC into another entity, so I don't have that liability mixed in with my note portfolio. And usually we can do that without it being a taxable event. If it was in a corporation, then most likely we're going to trigger a tax by moving it out. So again, we have a lot of flexibility in the limited liability company. Another thing that's unique to limited liability companies is they have charging order protection. Charging order protection is really a lien against the member's interest. So if the LLC was sued, or a member was sued as an individual, instead of having somebody come in and be able to strip your assets, be able to come in and run the company, which if you're in a partnership or have other members would be very undesirable. It basically gives them a lien, and they would be subject to the distributions that that individual member receives. If a company's not profitable, there obviously would not be distributions. So they're continuing to wait in line to satisfy this judgment, which becomes very unattractive. We will give a very simple definition of that, of how it could even be more unattractive. So if I was sued and I'm a partner with you, and I had $1 million charging order or judgment against me, they are going to be liable to pay taxes on that $1 million as if they received that money. As we know, not all of us are pulling $1 million on our dividends out of our LLC. So if I was in line to receive $50,000 that year, they would receive my $50,000, but they would be liable for the full $1 million on their taxation. And at that rate, it would take a very long time to satisfy that judgment. So it becomes very unattractive to sue. It's a great tool for negotiating and getting them to settle for pennies on the dollars in some cases, or maybe even going back to the original conversation of, I have a liability policy or an errors and omissions policy. You know, you should take the insurance money that's available and leave me alone. All 50 states have charging order protection. Not all 50 states have charging order protection for single member LLCs. Every year, the list of states that allow charging order for single member LLCs is growing. And every year, the list of charging order being the sole remedy is growing. We're up to about 75% of the states that the charging order is the sole remedy, with about another 25% that you have charging order and foreclosure rules. So as every state tries to compete, as every state sees the shift from going from corporation formation to LLCs, we're starting to see more and more states adopt and strengthening the charging order. There are some preferred states. I'm not going to get into the in detail about the preferred states, but Delaware, Wyoming, and Nevada, for example, have single member charging order protection. Charging order is the sole remedy, and they have business courts that you can have a business lawsuit heard in, and the judges are forbidden to go rogue and make decisions on their own. They must follow state statutes. Illinois enacted the business court on a trial basis 2 years ago. It was so successful that they have made it a full-time thing. So we're starting to see states set up courts for business disputes, and instructing these judges that they must follow the state statutes, and they can't, you know, go outside and feel sorry for somebody and change the ruling based off of personal feelings. So again, that's in some assets, it depends on what you're doing. LLCs might not be as strong as a corporation in some aspects, but in the real estate side, the advantages, I think, outweigh any potential negativity that might still be out there. You know, as I said earlier, corporations were recognized formally in 1819. LLCs did not formally get recognized by all 50 states until 1996, and really were unheard of outside of Wyoming until about 1990. So, you know, hundreds of years of case law versus, you know, 30 or 40 years of case law. One of the things that we'll kind of discuss, and this might take away a few of the questions, is there's a misnomer out there that LLCs do not have to keep minutes. LLCs do not have to do resolutions. Well, we have a couple types of law that happens during a lawsuit. We have our state law, where if you go down to the Texas Secretary of State, there are some things that you have to meet to form an LLC. You know, I have to file articles of organization. I'm supposed to register with the Department of Taxation, and I'm to pay an annual fee, and I must have an operating agreement. So that's the minimum that we have to do to form that entity. Now, that's a legal recognized entity now in the state of Texas, but it does not mean that that entity is going to provide the protection or the benefits that you're hoping for. It just met the simple qualifications of what the state says you have to form it or to renew it each year. We have case law. So if anybody's familiar with a lawsuit, both sides are, you got your litigators who are looking at case law of how can we, set this aside. We need to find all the negative stuff about entities. We need to look for cases where corporations have been set aside or LLCs have been set aside. And the defense team is doing the same thing. They're looking for, all of the case law that benefits, that says this LLC is afforded this protection, this corporation is afforded this protection. And case law has proven, even in LLCs, that there's a lot more to do, even if the minimum requirements are only two. File those articles of organization and have an operating agreement and keeping your company current at the state. So it's important that when we form these entities, that we form them and structure them properly, and we maintain them properly. One of the things that I see most from somebody who reaches out to us that has an existing LLC, when we really delve into it and we start asking all of the questions, they're missing everything. We had a gentleman about 3 weeks ago who called me and wanted to have us catch up on his compliance documents. I asked him, how long has your business been in business? He told me 30 years. What state are you in? I'm in Florida. I went to the Secretary of State of Florida to do a little bit of homework on him. That company has not been in existence for the last 20 years. He forgot to renew his fees, just let it lapse, and then they have dissolved the company. And in fact, in this case, somebody has reformed the entity with a new name and was doing business with that new name. So when we form these entities, we need to make sure, one, we're doing all the proper stuff, but that we're also keeping them current. And that's one of the things that if you engage with us, we provide the reminders for you that your fees are due at the state, that you need, there's certain things at the state level that you need to do. And we also make sure that your entity is doing all the documentation and staying compliant. Another thing that we see is lack of operating agreement. So anybody can go down to the Secretary of State, and in more and more cases, anybody can go to the state themselves and file an LLC online. Well, by doing that, you're registered with the state, but you're not compliant unless you have your operating agreement. The operating agreement is very important because it outlines the rights and responsibilities of each member. In some cases, the operating agreement dictates what the business can and can't do. So the operating agreement is required in all 50 states. So if anybody ever was to show up and ask for your operating agreement, if you were ever sued and had to produce it, if the IRS audited you, and that would be one of the things they would ask for, is your operating agreement as well as other documents. Without that operating agreement, if you were in a lawsuit, it would be disregarded and you would be being sued as an individual right off the bat. If you are audited by the IRS and you weren't able to produce this, it's very highly likely that any business deductions that you took or expenses you took would be disallowed and you would be paying tax on that money. So LLCs use operating agreements, corporations use bylaws. They're for the same purpose, but different terminology. So LLCs, operating agreement, corporations, bylaws. Secondly, each individual company should issue membership shares. So LLCs have membership shares, corporations have stock certificates. Though a membership shares dictates who the owner is, it gives you proof, it gives you something in your hands to hold. You can frame it, you can sell it. It is your proof of ownership. the same as a corporation. If you have a corporation, you're issued shares. If you purchase, shares in a publicly traded company, those shares indicate your percentage of ownership and what you're entitled to. Do you have management decision? Do you not have management decision? But you must issue those. So that's another common area that we see. A lot of people just they miss those steps. So those are the main the articles of organization, your operating agreement, or your bylaws. Those are the first two things that you must have to start to recognize yourself as a legitimate entity. A bank should not open a bank account if you do not have an operating agreement, and most banks are requiring you provide a copy of the operating agreement. Same thing goes with corporations. Now, some banks might not require it, but it's getting rare, more rare that it would not be asked for at the time of opening the bank account. Each entity, so when we have a LLC or we have a corporation, they have their own unique tax ID number. So on some occasions, we have seen somebody who has an LLC, they've opened bank accounts with their social security number, and the entity does not have a tax ID number. That's another area that can get you in trouble taxation wise, as well as in a lawsuit, not provide the separation that you're striving for. And we'll talk about separation and responsibilities as we get going a little bit further. Liability goes both ways. This is a kind of a crude example of separating your risk. A lot of times we don't want to put all of our eggs in one basket, especially maybe higher risk business, higher risk engagements, or higher risk assets. We might want to separate those and put them into different entities. Now, by doing that, you're separating those assets and protecting other assets from the lawsuit that's related to the company that's being sued. If I had, and I'll give you an example. If I had 5 rental properties in Alabama with $15,000 equity in each one, if something was to happen, it would be a bummer, but it's not the end of the world. It's not going to stop me from retiring. It's not going to stop me from being able to feed myself at night. So I would feel comfortable leaving those 5 properties in one LLC. Now, if I had a property with $1 million equity and 4 with $15,000 or $20,000 in equity, I would definitely move that $1 million equity property out of that LLC and have it in its own LLC to separate it. Another example would be maybe I've started with single family rentals, and then now I got to a commercial property or to multifamily. Well, the commercial property is probably going to have higher liability. A multifamily unit, if I have 16 different tenants living in it, is going to be higher risk. So I might separate those away too. So there are good advantages sometimes about separating, your assets and and putting them in multiple entities. It's not always necessary. It's a risk level. It's an asset situation, and we're more than glad to help determine when is it time to add another entity, or is it worth setting up another entity. Insulate and shield, and that's really what we're talking about. We want to shield our properties. We want to shield our operating business. We want to shield our investments. So when we structure these, it's always geared to give you the maximum protection. We want to protect you, your family, and your personal assets from these investments or from these properties or from our active operating business. because properly structured, that's exactly what they do. Lawsuit stops at the entity, and if formed properly and maintained properly, that your personal assets are off the table. A lot of us have operating businesses or investment, companies or properties, and it protects our W-2 wage at our jobs. It protects my children's savings that I might be saving up for college. It protects my assets, and that's where these really become powerful, is to be able to have that separation and that protection between me and my family and what I'm doing out there to try to improve the quality of my family's life or our situation. What happens during a frivolous lawsuit, and it doesn't even have to be frivolous lawsuit. If you've been sued, I would say the stress level of a lawsuit, small or large. Now, if you're a wealthy person, you have a team of attorneys, maybe the stress level is not as big as it is for individuals like us who do not have a team of attorneys. I know a lot of attorneys, but I don't have one on retainer or one that works for me specifically, that is out there working for me. We need to go hire an attorney, and we need to look for that attorney in a field that's related to what the lawsuit's about. The sleepless nights, the time that you put into a lawsuit, depositions, trials, debtors exams, meeting with your attorney, going over everything, making the notes. Did I do this right? Did I not do this right? It's very time consuming. Money, again, if you've been sued, to answer a complaint, a simple letter, somebody wants to write a letter and demand money that they paid their attorney to do. Just hiring an attorney to respond to that can be in the thousands of dollars, just to write a simple letter back that we did nothing wrong, go pound sand. And then that attorney comes back and says, well, I think they really did something wrong, and we are demanding this payment, or we're going to be forced to sue you. And then you have to write another letter. So if it's on billable hours, I don't know if you can find an attorney for under $200 an hour anymore. And I don't know if I would trust most attorneys that are charging $200 an hour if it was something of good, of great value. And your health, the stress, the sleepless nights definitely affect your health. We see this a lot of times when somebody does get sued, and they call panicking. I'm ready to set up that entity now. I was sued, or and then you have to tell them it's too late. You need to plan ahead. You're forming these entities while the legal C's are clear, and we're not doing them after the fact. So, kind of my rule of thumb is, when do I form an entity? Before you sign a contract, before you invest in a property. That is the best time. Now, if you've done any of that and you do not have an entity, but the legal C's are clear, then it's no problem. We can form the entity. We can go ahead and start the protection. It's not the end of the world. If you're sued, it takes a lot of our options off the table. In some cases, I don't know what to tell you. Good luck. I hope everything works out. When you're done and you're ready to restart, let us know. And then there are some cases where we can bring in, the A team of attorneys and craft some stuff that could help. It might not eliminate it all, but maybe there's some things that we can do that provide some help or some relief. We've talked about a separation, and so one of would be an example. I have an investment property, it's in its own entity, and then we have our current assets, and those assets could be notes. So we're at that time, we don't want to risk our note portfolio due to this investment property. So at that time, we make the separation, and now we've isolated each asset from liability that the other asset or other property could cause. Maybe on the note side, you have a JV partner or you're bringing in some type of investment money. Why have your own properties in that company being put at risk if something goes wrong? So in those cases, we definitely want to talk about separation. Is it always necessary? No, but it's a good thing to be aware of, that we can separate it. And it's a good thing to know when the right time to do that separation is. Levels of asset protection. What do you have to lose? We have simple structures as one LLC, and there's multiple layers of protection that we can put in. So as we start to build layers, so as income levels rise, as assets rise, you could build in additional layers of protection. Or maybe you want to start out with an extra layer of protection because you know what you're doing is going to be successful. You're dedicated to it, and you're going to put the hard work in, and you really do believe in your ability. And I when I first started out doing this, I'd always hear somebody tell me, I'm going to make $1 million in the next 5 years, and yeah, whatever. But now I can talk to somebody, and I know if they have that ability. Doesn't mean it's always going to happen, but you could tell by their level of preparedness, their confidence, their knowledge of how much work they've put in, the team that they've put around them. And I cannot stress enough about putting the proper team in. I would never go into the note business just by reading stuff on the internet. I mean, I would get an expert like Scott, who has the courses and the education that can, teach me what to avoid, how to do it, what are the tips and tricks, and somebody who might hold me accountable, who's going to force me to do it. So putting the right team together is just another thing I cannot stress enough is, surround yourself with successful people, or people who have learned from their mistakes and are not afraid to admit that they made the mistakes, because that's really how you learn, by making mistakes. But if you can avoid making those mistakes and have somebody who's made them for you, that is the best case scenario. We talked about the simple first step of asset protection, and that is an entity, whether it's an LLC or a corporation. So we have a simple low cost entity, and that again is the starting point, period. You should not do any type of business without an LLC or a corporation. And it's kind of slowly disappearing, but there's still some old school CPAs and accountants out there. You don't make enough to have an LLC, or you do not make enough to have a corporation. Well, in their world, it might not provide enough tax savings to make it worthwhile, but they're missing the point of, if you're sued, can you afford to be sued? No, we can't. Can you afford to have your W-2 wages taken? Can you afford to lose your personal assets? In most cases, we can't. So this misnomer out there is you must make at least $80,000 a year before you form an entity is just a crock. I mean, if you're going to do any type of business, you should have an entity. If you can't, afford, on average, let's say an entity runs around $1,100. If you cannot afford $1,100 to start out properly and have that protection, should you really be making an investment? Should you really be doing anything? My simple answer would be no, Because if you don't have $1,000, how are you going to start a business? If you don't have $1,000, how are you going to invest into something? You know, maybe $1,000 would get us a popcorn machine and we could sell popcorn on the corner, but I don't think anybody here is looking to do something like that. I think everybody that would be listening today is looking to, you know, change their lifestyle to better themselves or their families, or to prepare for retirement. And I've, you know, one thing personally for me, I never thought about retirement 20 years ago. It just wasn't even something I thought about it. But now it's something that I really think about. You know, I need to prepare for that time. I need to continue to build my portfolio. I need to continue to add assets that are bringing in passive income so I can make that transition, and I can make that transition comfortably. Adding a layer here. So what we simply did is added another company. So instead of me or me and my partner owning that simple LLC, I've added another company that is a holding company. So that company now owns that LLC. Proceeds flow from that LLC up into the holding company and then are distributed there. So by adding one other company, we just put another layer. So if they get through the first layer, now there's another layer that they must attack and go after. So this would be a very common, you know, structure for somebody that is even getting started. They're preparing for that. They know they're going to grow. They know they're going to do something. This would be a perfect starting point to give you another layer of protection. We don't have time to go into great detail, but maybe you're not able to have your operating company or your note company or your rental property in a preferred state. Well, in a lot of cases, the holding company can be in a preferred state. So if the state that you're operating in is weak or has weaker protections and they pierce it or they get through it, now they have to go to a state that has the best protections. This next slide adds another layer. It's a viable strategy, but it's kind of misleading because when we're getting to this type of level, we have a whole nother strategy and structure that can not only protect all of your assets inside the companies and your personal assets, but in a case like this, we can use a trust for another layer of privacy. So everybody's probably heard of land trust, privacy trust. So we could put a privacy trust in, so our name is not on public record anywhere in the holding company. In some cases, probably not necessarily recommended, we could use an irrevocable trust, and legally, if we were sued as an individual, we could tell the court we do not own any of those. So there are trusts that allow you the ability that if you are ever sued as an individual and you are asked, do you own any of these companies, you can legally say no, not only in state court and federal court. That's, again, a very brief explanation of this. There's more to it, and there's a lot more that we can do to add on to that. What we've talked about this, you have to weigh your risk to your rewards, and that's as we add multiple entities, that's really when the decision of when we have to do that. We have to weigh the risk versus reward. We've talked about this throughout the program, but your asset protection starts with a strong foundation. And that the start of that foundation is forming your LLC or your corporation, or if you have an existing LLC or corporation, make sure that it's structurally sound. and is going to perform and do the job that you formed it for, or the reason that you want to form an entity. Tax benefits of being in business, you are afforded additional write-offs and expenses that you might not be able to do as a sole proprietor or as an individual. Here's some examples. Not all of these examples would fit necessarily your business model. There needs to be legitimate business reasons to take these deductions, but done right for the right purposes, documented right. Here's an example of some of the tax deductions that you can take that you might not be able to take as an individual. This list could go on and on and on. And that's where a tax professional comes in. And when you're dealing with a tax professional, I would not go to a CPA that does just personal tax returns. I would go to a CPA that does business tax returns and who has a good reputation, who's going to reduce my taxable liability, but still be able to provide me benefits. But again, if we don't properly set them up, we're not afforded these tax benefits. To have the benefits, we have big responsibilities. And when I say responsibilities here, that is making sure that we keep our house in order. I'm trying to speed up a little bit because I know we're running close to the time slot. So again,
you're good, Brent. You still got time. You're good.
Okay. So
good.
If there's anything you want to expand on, we'll do it. We'll do it in the questions and answers.
Yeah.
So if I said something, guys, that you think you want more detail, then raise your hands and we can go into a little bit more detail. The biggest mistake company owners make, and that is separation, not separating the business from ourselves. And again, I think most of the people on the phone call here are either single member or have a partner. So it's very important that we provide separation. And there's multiple ways of providing that separation. Having separate bank accounts, having separate tax IDs, by document. We're always going to document. And it might sound weird that I am the only owner of this LLC or I'm the only owner of this corporation. Why am I going to hold meetings with myself? Why am I going to document this stuff? Well, that is how you prove to the courts that you are separating your business from your personal self. It's also case law. So almost any negative case law that I've ever seen on LLCs is lack of separation and lack of proper documents. Corporations, it's same thing. People are not separating. They're using business credit cards for personal expenses, personal credit cards for business expenses, and they're not documenting and putting it in writing the reason we're doing the stuff that we're doing. And they don't meet the legal requirements. So they're not following state law, they're not following case law, or they're not keeping their company in good standing at the state that they're formed in. Common mistakes, we're talking about it, commingling funds. That is the first thing that usually the IRS would look at an audit or in a lawsuit. Are the business is the business funds separated from the personal funds? Is there a business account? Is there a paper trail of money that have left the business for either expenses or salary or distributions? Are the expenses for the company for the expense and not for myself? I should not take my business checkbook and go buy my kids bikes. You know, if I want to do that, I could take a distribution and document the distribution. And then once the money hits my account or me, then I can go buy bikes. We're not going to do it out of the company. And vice versa. If, you know, we shouldn't be going out and buying things for the company with our personal funds. Now, if you do, it's not the end of the world, because we can document that. We can document that. You know, I went and bought this piece of property. I had, you know, my cash in my pocket. I didn't have the company's thing. And you can make a loan to the company and have the company reimburse you. So it's not the end of the world if you make some of those mistakes, but it is the end of the world if you don't document it properly to explain why it happened. So we talked about, you know, so I'm jumping ahead of the slides just a little bit. So we're keeping our personal and corporate funds separate, and we're documenting all transactions between stockholders and officers. That's, you know, salaries, loans, and distributions or benefits that the company is providing for you, or that maybe you stepped in and you're loaning your company money, or you're borrowing money from your company. Again, it must be documented. It must be documented in writing, and it must be documented properly. Another one we see is failure to sign on behalf of the corporation or LLC. So what does that mean? You know, Scott, hey, do you want to go in on a deal with me, with my company, ABC LLC? And Scott says, yes, let's draft up a contract and do this. And I do not sign it as manager or member, or I do not sign it as president of the company. I just put my name, and I'm not documenting that this is a deal between the company and Scott. This is a deal. It makes it look like this is a deal between two individuals. My company name could be in the document that it's ABC and Scott doing business, but you know what? I forgot to sign on behalf of the company. I made a mistake, and it's just a starting point for people to start to question, are you doing what you're supposed to be doing, and why are you not following the formalities? Always use your title. Here would be an example. So anytime Aaron is out there doing business, if Aaron's signing a lease or entering into a new a new partnership with somebody, or buying something on behalf of the company, entering into a lease for a new office, he's always signing it as Aaron Young, president. If this was an LLC, it would be Aaron Young, manager, if it's manager managed, or Aaron Young, member, if it's member managed. So titling on this type of stuff is very important. Failure to identify as a corporation or LLC. That goes for your website, for your marketing material, in negotiations. You always want to tell the public that I am an LLC. We're doing this with ABC LLC. You're not doing this with Brent. My website. Now, that doesn't mean the website might, at the very top, has to say Laughlin Associates, Inc., a Nevada corporation. But if you go to the About Us section, you're going to see Laughlin Associates is a Nevada corporation that was formed in 1972. It could be on the footer of it. In our contracts, we're always going to identify that it is Laughlin Associates, a Nevada corporation. Not keeping the corporation or LLC in good standing with the state, we've discussed that. It's simple. If you are a client of ours, we remind you. In most cases, the state reminds you. A big thing we see when people self-manage corporations or LLCs, if they change their address or move their office or something, they forget to update that with the state. And now all of a sudden your notice of your renewal is going to somewhere where you no longer reside. The forwarding notice expired, or The post office, I think everybody knows, doesn't always deliver your mail. So it's important to always keep it in good standing. Doing nothing, and I think that is just our common shutdown. If we don't know how to do it, or we get overwhelmed, we go into this just do nothing phase. I'm going to ignore it. I'm going to bury my head in the sand, and I'm just going to keep on doing what I know I can do. Or if I'm overwhelmed, I'm going to just, do what I think is going to make me money, and not necessarily the rest of the stuff that I should be doing, keeping my company current, following the formalities correctly. Failure to follow any of these rules that we've talked about will leave you personally exposed to liability and tax penalties. It's a bummer. We've seen it happen where you have, business expenses be disallowed, and you end up with a big taxable bill plus penalties. And those are things that you want to, avoid. Having your personal assets, or you personally being exposed to the lawsuit because you didn't do something properly. I mean, it could be life changing and can set you back, years and years. We pretty much covered that. If your corporate records are not in order and you are sued, you could be stripped of your liability and tax benefits. And that is the main reason about where we're going to be going next, of why and how to do that. But again, your records, whether it's your LLC or your corporation, need to be in order. They need to be in writing, and they need to be someplace that, if needed, you can pull out and provide to somebody to show that you have done it. Now, it's not the end of the world if you haven't done it. You could have a 5-year company. Everything is good now. Legal C's are clear. There is nothing wrong with going back and reconstructing those documents. And that's one of the things that we do for you. If you were to work with our team, we can go back all of those years and reconstruct all of the documents that you have missed. Cornell Law came out with a review that if you fail to keep proper corporate records and you are ever sued, you have a 50 to 94% chance of losing your personal assets in order to satisfy a judgment. Harvard Law, all of the large business law schools have documentations and statistics on what happens when you do not do this stuff. So again, when everything's good, you don't think about it, but as soon as something happens, you want to be prepared and be able to make these statistics go down to 0 if possible. That, 0 might be unrealistic, but you can lower those rates into, the 5 or 6%. So it's a huge discrepancy between doing them and not doing them. What do you do to protect your benefits? I think I've kind of harped on it for about 30 minutes, but one of the main things is we must do minutes. Now, a small company doesn't have to do minutes weekly or monthly, but you must do minutes. In the minutes, we are going to establish what we're planning on doing, major decisions, growth decisions, things like that. It's required in all 50 states to do minutes. I've heard people, there's websites out there, LLCs don't have to do minutes. All 50 states require you to do at least a yearly annual minutes. At the federal law, if you were sued federally, you better have them, and case law has proven that you must do minutes. They must be prepared in written form, and basically it's the memory of the company. So as we do these minutes and we do them each year, or we do them quarterly, or maybe we're a larger company, so we're doing them, you know, monthly. It's the history of the company. It's the history of the decisions that we want to do. It could be the history of of distributions, the history of the, you know, our growth. You know, the document that next year I want to buy 20 properties. Does it mean we have to buy 20? No, but we're just letting everybody know in writing, if they were ever to look at it, that was our plan. That, you know, because I bought 20 properties, why is it a red flag? We planned for that. I can show you where last December, that was the company's goal, was to go get 20 properties. So it's very important to do those minutes. Resolutions are separate from the minutes. So the minutes might say we're going to go buy 20 properties, but a resolution is documenting, and it's the permission to go and do it, and it's the memorandum that we did do it. So, you know, I'm giving permission for myself to go purchase a piece of property. I'm giving myself permission to go lease this building. I'm giving my permission to set myself up a retirement plan. I'm giving myself permission to hire a CPA. And I'll give you an example of some resolutions where you would do a resolution for, but they're very important because that's your permission slip. And again, it's documentation that you can show in the event of a lawsuit or an audit that all of this was pre-thought out, all of it was documented, and what I'm doing is on behalf of the business and not on behalf of myself. Here are some of the examples of when you would do a resolution.
It's the most interesting slide, right?
It is the most interesting slide.
Keeps going on and on.
So that's a small example of resolutions. One thing I do want to tell you, if you need to go down and buy a ream of paper, you don't need to do a resolution. If you know you need to restock the refrigerator with bottled water for your clients, you don't need to do a resolution for simple things like that. Those are expected expenses that a normal business would do. But you know, these here are some of the examples of what you should do. A lot of times at this point, I can ask somebody, you know, do you have an operating agreement? Yes. Have you issued shares? Yes, which, you know, usually we find out no, but they agree. And then the next answer is, oh, don't worry about it. My CPA or attorney does this for me. Well, maybe, you know, I doubt your CPA is doing this. Unless you get a large bill, you know, every month, unless he's calling you or you're calling him and asking him to do this stuff. And the same thing with attorneys. You know, most attorneys, they're going to set up the entity properly. They're going to do a very good job. They're going to give you a great operating agreement, but an attorney is not interested in calling and checking in with you to see if you want to spend $300 an hour to start to do some of these documents. You're probably not calling your attorney every time you need a resolution and saying, hey, go ahead and turn the clock on for us and let's start doing some resolutions. Because it's not a money maker for them. They're looking for new cases. They're looking for higher billable hours. So it's just not something that you're probably willing to spend for, and it's not something that they're thinking about to call you to turn the clock on to receive those billable hours. Already have a company. That's where our corporate veil protection service comes in. So if you already have an LLC or you already have a corporation, we have a corporate veil protection service. We can enroll you in, whether you're 1 month old, 30 years old. We have a program designed for you that we can go back and start to do this, to do the stuff. We maintain your corporate formalities for you. We actually produce them. We email them to you. You sign them. You put them in your corporate record book. We also store copies. So in the event of a fire or something like that, or losing your records, we can reproduce those for you. Consolidate my records, so you can consolidate them all into one place and know that you have them in chronological order. They make sense. They're separated, so they're easy to get to. They're easy to find. You're able to track the history of the company, and we also track the history of the company for you. You know, we always are looking to make sure your company's in good standing. If you come to us and say, hey, I want to enroll in the corporate veil protection service, one of the first things we're going to go do is make sure your company's in good standing. Reduce the risk of having your corporate veil pierced by the IRS, courts, creditors, or legal naydewers. And in some cases, creditors can be your worst enemy. And you know, an LLC or a corporation is not designed to defraud creditors, but sometimes things happen, and if properly structured, creditors cannot come after you as an individual. You know, businesses go bankrupt, businesses have bad times, and there are times when it's unavoidable, but properly done for the right reasons, you know, that's one of the areas where, you know, I think you might see some of the most lawsuits or the most problems is with creditors. We always want to make sure the corporation is in good standing in the eyes of the law as well as the eyes of the state. End-to-end cycle for your business. So we're going to have a start to finish chronological order of the documentations that make sense for you. You can be prepared for your partner to add partners, to protect your partners, for capital raises, and for exiting your business. And the nice thing about, I think, you know, delving into this more is you always want to structure your business with the end in mind. I know there's a lot of people that love to work until they die, to the day they die, but not everybody wants to do that. So you want to be able to be prepared to exit your business. We make it simple. It's a very simple process. You know, I don't know if there's any other clients, you know, that Laughlin clients on the phone now, but it's easy to sign up. It's easy to work with your coach, and we make it as simple as possible. If you have if you need a corporation or LLC through Scott, this is something we've done with Scott. We will provide the entity for free. All you have to do is cover the filing fees if you enroll into the corporate veil program. So if you enroll into the corporate veil program, we set up the entity at no cost for you. You're just required to pay the state fees. It is tax deductible. The prepayment is $995. So if you wanted to enroll in the program, it's $995. That covers 1 to 5 years. If you wanted to go back further, we do have another program that goes back further. So if you have a 20-year-old company, we can go back further. In most cases, 5 years is the magic window of lawsuits anyways. So it's not always necessarily to go back and reconstruct 20 years of records. We can. There's an additional fee on that. So if that's something that you wanted to do, you're more than welcome to call in and discuss that. We can also do a install program, so we can finance it for you. It's $255 down. It's $80 a month for 11 months. It's billable. It is tax deductible. It is a business expense. And on the install option, we also report to the credit bureaus, which could help you build some business credit. The link at the bottom here, the corpveilprotection.com, will take you to a page that you can simply sign up for this program and take advantage of this. Also, we have the 800 number down there, 800-648-0966. You are more than welcome to call in. There's staff available right now if you wanted to deep dive or schedule an appointment. So you can always call in and reference Scott Carson. Everybody's going to know Scott and is very familiar with clients of Scott, and so they'll have a great understanding of what you're probably trying to do.
Yep.
Or if you're an existing business unrelated to this that you wanted to enroll, all of my coaches have been business owners and have extensive experience in business and can help walk you through any of the stuff that we've talked about. So I think at that point, I encourage you to at least go check out the corpveilprotection.com. I encourage you to call in. You can call in today. You can call in. There will always be somebody available for you, and we do not charge for consultation. So that is one thing you will never be asked to pay to ask questions. So ask away. Take advantage if you have questions.
Yeah, about 95% of our mastermind group and our coaching students are clients of Laughlin. And you've also, guys, if you've got multiple LLCs, call in and talk to Brett or talk to somebody there. There's you guys actually have a discount. They've got multiple LLCs.
If you have multiple LLCs, the price goes from $995 to $595 if for your second, third, fourth, fifth. So we do have discounts on multiple LLCs.
And then after the first year, it's what's the cost to renew after year one?
After the first year, you have two options. We've educated you pretty good. You can go and do it yourself and come back to us in 2 years because you never did it. Or it's $50 a month or $475 if you want to prepay the year in full. So, maintenance after the first year is drastically reduced to continue to service your entity.
Cool. Question here. Vicky asks, if you have an LLC and you haven't done these things, is it better to start over with another LLC than go back and try to recreate 8 to 10 years or move the property in a new LLC and start over?
To give a proper answer to that, probably need to have the conversation, but the general answer is no, you don't need to form a new LLC. We can go back, if legal C's are clear, we can go back at the $995 rate. We can go back 5 years, which would cover the statutes of a lawsuit. If you wanted to go back further than 5 years, it's $1495, and I don't care if it's 10 or 20 years. So, $1495 covers from year 6 through infinity. If you were at 5 years and 10 months, I'm not going to ding you. We'll treat it as 5 years. But I would say if there's no legal problems, then let's just clean up the company. You have age to it, which is valuable. And why start over from scratch? Why pay, to do a quick claim or something and transfer the property out? We can just simply clean it up, and we can clean it up quickly.
Perfect. Do you do corporate veils for LLCs? You do it for all entities, correct?
We do corporate veil for LLCs and corporations. Limited partnerships, it's not really necessary. So for all corporations, all 50 states, LLCs, all 50 states.
Do you do LLCs in Wyoming, Maria asks?
We form LLCs in all 50 states. And we were one of the first companies to open an office in Wyoming. So we have a long history.
Right. Allison asked a question. What is the difference in getting set up Laughlin and Bullseye Capital if you want to raise funds in the LLC? Alice, I think you're missing the point. Laughlin's going to help you make sure all the documentations. If you set up a fund like what Joel was talking about this morning, you better make sure you're in corporate compliance with your documents and your disclosures. So you would hire a company, like you would hire Laughlin to come in after you set up your entity like Bullseye talked about this morning, go in and document everything, making sure your entities, the LLCs, and all that stuff is set in place, so you're able to just make sure you're relevant and not breaking the law or anything. We got a question here. Somebody went and got an LLC at your state, but they never got an EIN from the IRS. They use their personal social security number to open a checking account. What should they do?
I would call the IRS or go onto the IRS website, and we would actually do that for you in the corporate veil. We would get you the EIN number.
Yep.
I would then let the bank know, and I would give them a copy of the IRS letter that we can get almost instantaneous, that
Yep.
I think I made a mistake and my social security number's on the bank account and it should have been the tax ID number. Then secondly, if it's been a disregarded entity the whole time, I still might let my CPA know or an accountant know, hey, I had the bank account with my social security number. I do have the EIN, and just make sure they double check to make sure that there's something there that doesn't need to be cleaned up. But it's simple. Typically, if you're in the corporate veil program, while you're on the phone, we can have the EIN in a matter of minutes.
Yeah, it's not that. It may take 24 hours if you're registering more than one, but it's usually relatively quickly just by going to the website and registering and filling out that information.
Correct.
What's the best, Allison asked the question, what's the best way to document your tax benefits?
Well, we're always going to create minutes, right? So in the minutes, we're going to decide on certain things. If we're going to do maybe an HSA, or we're going to set up a solo 401k, or we're going to provide, key man insurance, things like that. So we're going to do that in the minutes, and then we're going to back it up with a resolution. Now, the second part would be work with your CPA, to make sure that they're accounting for those deductions right. And interviewing CPAs, I talk to people all the time that have CPAs. It's been my CPA for 20 years. And you tell them, I want to form an LLC and set it up as an S Corp, and they'll say, you can't do that. I never heard of that. So ask questions. And are they familiar with the entities? And a good CPA should be giving you advice. You're paying too much in taxes. Why aren't you doing this? You could do this, you could do this, you could do this. Another thing that I think, we all miss with certain CPAs is, I would hope my CPA calls me in June or July and says, hey, Brent, you're going to get killed this year. Right now, if the year was to end, you're going to owe $80,000. We need to start thinking what type of deductions we can do so we can reduce that. So at the end of the year, we can give you examples, we can give you recommendations, we can jump on the phone with CPAs and help them think outside of the box. But there's great CPAs out there that they do it. They're on the balls. But so ask questions. What can I do to not get hit so hard with taxes this year?
Yeah, I think Allison, you're in Houston. There's a Michael Plax who's a great CPA in Houston and a friend, and he really knows the real estate discount or deductions and things like that. So check with him. Montrese asked a question.
One of the things I didn't want to jump over, but if you take action now on this corporate veil protection, the first 10 people do get a free tax evaluation, and that is done by a CFO who has CPAs, tax attorneys. And so, Scott, that's something that we just added the last minute that we wanted to do. So on the court veil protection, the first 10 people who sign up, they will get that. I know this firm personally. I've worked with them for a long time. Not only would they find you the savings of this, but I've seen cases where they have gotten people refunds of 80, hundreds of thousands of dollars, where, I mean, and I'm not talking people that are extremely wealthy, the average the average person. So that is included for the first 10 people that go to the website and sign up.
Nice.
Or call
Patrice asking a question. There you go. Exactly. Go to corpveilprotection.com. What if you're the only person, you don't have a team at the moment? Patrice, you still need to put an LLC and be in business with people. And now you've got a team, a phone call away to call Laughlin Associates and bounce ideas off there to set up your documents, your paperwork for you, making sure that you're in compliant and staying on top of you. Because sometimes if you can't afford to put, I always love it because I get a monthly phone call from Debbie, an email from Debbie. Hey, Scott, we need to go through what you've done through this month, or here's the forms that you need on your disclosures to add into your file folder. It's such a beautiful thing.
Well, and you do have a team. You're on this right now, and I know you, as well as everybody you bring on, are extremely helpful and answer questions and help people.
Yeah.
So the answer is you by being here, you have started and you have a team already that you're not aware of. I don't think I've ever talked to anybody that you've had on your show that wouldn't pick up the phone and answer a question. I mean, maybe there is somebody, but I've never experienced that.
They haven't been on here very long. Quick question here before we wrap it up there. Brett, what would you say is the advantage of a series LLC versus a regular LLC?
Me personally, I don't think anybody should ever form a series LLC. Series LLCs are not recognized in all 50 states. At one time, they were recognized in 16. I think it's down to 7. You find me somebody who can manage a series LLC properly, and you're willing to pay that person to run it properly, introduce them to me. I would love to find somebody that knows how to manage them properly. I have talked, I don't know, and in the one exception, I have found a couple people in Texas. If I was going to do a series LLC, it would be in Texas and only in Texas. Yep. And I would find that I would hire somebody that can manage it, because the problem we see all the time is you could talk to 15 CPAs and you're going to get 15 different answers. And then what do we see happen with series LLC? One cell gets pierced and it pierces the whole thing because somebody made a mistake. They didn't have separate sets of books. They didn't have separate EINs. There was co-mingling between the cells and stuff. So if you're going to form a series LLC, Texas, and then seek out a professional on the tax side that can make sure the separation and everything is done properly. But other than that, I avoid them. I'm not a fan of them. Except, the one thing you would say is Texas would be a state that if I was going to do it, it would be in Texas.
Yeah, I 100% agree with you. If you're here in Texas, we've got some of the professionals here to do it, but otherwise, most of the time, all you need is a regular LLC to get things rocking and rolling. It's not overcomplicated to make things simpler. And it's not the same price to create a series LLC as it is for a traditional LLC too there for you. So
it's not as easy as people think.
Exactly.
People make it seem, you got some of these marketers are out there who make it seem like it's so simple that you just file the state, you got a series and you just go and do stuff. It's not that simple. So.
Perfect. All right, guys, corpveilprotection.com, or you can call in at 1-800-648-0966. That's 800-648-0966. Get started. And as Brent and you guys awesomely offer, first 10 people will get a tax review by the CFO and help you find some tax advantages and discounts for you. So, Brent, thank you so much for coming, man. Great stuff. Way to really do a deep dive in a lot of stuff. I think a lot of people got a lot out of it. And I look forward to seeing you next time, someplace where we can pop a top at some point, huh, bud?
Yeah, I mean, I haven't been to Austin for a while. We need to get this stuff all cleared up so we can start seeing each other again.
I know exactly. Austin or Cape Coral, Florida, or San Diego is where we see each other at most of the
Tell
time.
me, if you say Cape Coral, I'm on the way. I love going to Cape Coral.
We might just need to do a getaway there just to get a heck out of Dodge. You know
Let's go.
All right, brother. We'll see you later, Brent.
Thank you for having me.
Thank you, bud. Thank you very much. All right, cool. All right, guys, don't go anywhere. We are going to jump right over here for our final speaker of day one here. I trust me, you guys want to stay abreast. I know we've been going rock and rolling. Don't go anywhere because I guarantee you're going to love what our next speaker has to say. This guy has so many years of experience in doing a variety of things. I know he is going to answer some of the biggest headaches that we have as note investors when we have to dive into the real estate side of things. Because let's face it, I love performing notes, and I don't like rentals. I don't like fix and flips. I mean, I've been at the rental, but you're still going to end up with that in this business. So hang on one second. Don't go anywhere. And we'll have John Swarinski with iCandy Homes be right back.